Hey guys, it's Crypto Llama here, and today I wanted to go through some technical analysis on SPS. I'm going to supplement the analysis with the psychology behind the price action, as I believe this is just as important and will also help us understand the underlying reasons for price change. So we're going to be talking predominantly about accumulation phases here. These phases are generally characterized by sideways market activity where prices trade within a wide bounding trading range and seemingly go nowhere. But it's in these areas where we can see intelligent activity occurring and where distribution of an asset moves from the weak hands to the strong. If we can indeed learn how to identify the preconditions of these phases, we can undertake our participation and campaigning before a large markup occurs. Guys, as a disclaimer, I am an SPS holder and this is not at all financial advice. These ideas are just that of my own opinion. If you intend on investing your own capital, please do your own research or seek financial advice for that. So in order to understand accumulation, we need to see how it forms. And this usually happens at the end of a large markdown, which we could otherwise call a bear market. This is where intelligent activity and large interests are accumulating and absorbing supply throughout a range, as you can see on the screen here. In these absorption phases, a footprint becomes apparent with the help of price and volume. And if we're patient enough and pay close enough attention, we can turn this footprint into an opportunity. So let's jump over to SPS now and start by defining the concepts of our signals by using phase analysis. So we've got a similar pattern forming here. We've got phase A to phase D, and the intention of our first phase, phase A, is about stopping action. And this is where downtrend becomes exhausted and there is a prevention of a further move downwards. It's also a great place for large interest to make sizable positions because there's a lot of fear and panic selling happening in this area here. Now on the way down to these lows, there's generally no organized support from larger informed interest to hold the asset up, and that's what causes this downwards momentum here. Now, our second phase B is all about supply and demand. So in this area here, we need to establish causality here with enough time for larger interests to accumulate their positions, which in turn allows us to have a longer sustainable future trend. Now, phase C is the final test of the lows and the last test of supply here. Now, if there is supply, larger interests want to participate in this absorption, which we saw here. We'll also see demand tested, which shows us whether we're ready to commit to the upside or not. So we're in this kind of test phase at the moment. So if the demand is not present yet, we continue back into these phase A or phase B until the larger interests are ready. In this phase, we also usually see a second point of fear, which is this bar here, where weak hands are also distributing to the strong. Now, finally, in phase D, we start to see a change in character and beginning of a new uptrend being established. This is generally in the form of price moving with more ease, more velocity to the upside, increased spread, and overall a more dominant demand signature. So this should be the next phase that we go into here. Let's take a closer look within these phases to understand how the price is reacting. So firstly, here we have what's called the preliminary support. So this area here is where substantial buying begins to provide pronounced support after a prolonged downwards move. We can see here volume also increases in this area and price spread widens. So we're seeing that spread in price, which is happening here. And this is actually signaling that the down move may be approaching an end. Then next up, we have what's called the selling climax. And this is where the selling pressure usually climaxes and heavy and panic selling by the public is being absorbed by larger interests at or near the bottom. And often prices will close off the actual low here on the selling climax, reflecting the buying by the larger interests. Next up, we have what's called the automatic rally. And this rally is actually caused by the intense selling pressure being greatly diminished. And we get a wave here of buying, which easily pushes the prices upwards. And this is fueled further by short covering usually. But the high of this rally will also help determine where the upper boundary of our accumulation range will exist. So we can put our horizontal resistance here. And this usually occurs as well at our preliminary support too. So then we get our second test, and this can happen multiple times during a trading range. And this is where price revisits the area of the selling climax to test the supply and demand balance at these levels. If a bottom is confirmed, volume and price spread should be significantly diminished as well. So we're also seeing this contraction in the volume signal here too. So then we have another second test here. So this next movement in price in phase C is really important because it can actually signal the ending of our accumulation range. And it's the shakeout here. But while I'm here, what we usually do as well is we usually put our support level around the selling climax. Now, as I mentioned, these shakeouts usually happen late within our trading range, and they allow the dominant players to make a definitive test of the available supply before the markup campaign follows. So what's happening here is that this shakeout is taking price below the low of our actual trading range here, which could also be called a stop hunt as well. Then it's reversed to close back within the trading range very quickly. So the psychology behind this price action and the shakeout is that it actually allows the larger interests to mislead the public about the future direction of the asset. And what they do here is they acquire additional positions basically at bargain prices. So these shakeouts can also occur later on within phase D as well, once the price advance has already started. And then sometimes we see rapid downwards movements, which are intended to induce the retail traders in their long positions to sell them to larger operators essentially. So what we're seeing now in phase C is the test. So throughout this phase, and this phase will probably go for a little bit longer here, but we're going to see a constant test of the market for supply. We'll see them at key points during a price advance. So if considerable supply emerges on these tests, the market's often not ready for the markup. And then we might see another test of the selling climax. So back down to the trading range. If we get a successful test indicating that the price increase may follow, typically we see a higher low on lesser volume. So that's what we're hoping for at the moment. We want to see higher lows on contracting volume. So once we get these successful tests, so the high lows on contracting volume, we see what's called the SOS, and that's the sign of strength, which is a price advance on increasing spread and relatively higher volume. So often the SOS takes place after a shakeout, which we've just had, and that will validate our interpretation of the accumulation pattern. So on the shakeout here, we're going to see the test happen with the higher lows on contracting volume. We may see another test here, higher lows contracting volume again, and then we're hopefully going to move into phase D with the sign of strength. After the sign of strength, we have the last point of support, which usually tests the top of our trading range, and then we see the consequent markup. So this would be the sign of strength, and we're looking for a rally here. So that sign of strength is going to look different to any of the rallies that we've seen previously within the trading range. So then we've got the last point of support here. And this last point of support is the low point or reaction of a pullback after the sign of strength. So after the rally that we see. So this pullback's generally characterized by the pullback to support, which was formerly resistance, on diminished spread and volume as well. Now, currently where we are at the moment, as I mentioned, this is the test of the supply and demand. So this doesn't mean that we're going to see this sign of strength happen immediately and this rally happen immediately. We still may go back down to our selling climax and within the trading range if the market's not ready to be marked up. Because basically what happens here is larger interests like to purchase very carefully in this entire range because they don't want to push the price out of the trading range here until they've completed their entire purchase. So in order to do this, they tend to put in the buy orders at the lower portion of the trading range, and then they stop buying once it gets to the upper half of the trading range. And this trading range basically is the place where the previous trend whether it's up or down, has been halted. And then we've got relative equilibrium between supply and demand in the form of this oscillation between the balance of the two extremes of the range. So when we hit these resistance levels, they're basically tests from the larger interest determining whether they're ready to push the prices higher. As I mentioned, the price still may attempt to go back down to the lower portion of this trading range here. And that's okay. And to be honest, the larger the trading range, so the longer time that this trading range happens, if we're staying within this trading range for longer, which I don't actually believe is going to happen because we've already seen the shakeout here. But the larger time duration that this happens over, the better that it's actually going to be for the new trend following it. Now, because we're looking for that rally and that sign of strength, our conservative traders would be waiting for a break of this trading range and then a retest before our markup campaign follows. So again, really important is the high lows on contracting supply. So we can see that the supply has actually dried up, because once the supply has dried up, we can ascertain that the supply is no longer capable of pushing the price back down into the trading range. So one thing I want you guys to take away from this is that generally at market bottoms, there's very few reasons to actually purchase something. But the thing is that there's very few risks to actually purchase at bottoms because the value is quite high. However, inversely, when the market is at the top, there's all the reasons in the world to buy something, which is why buying an asset at a high price obviously comes with a lot more risk. But what happens is the late majority start buying when the price is high, and that's when large informed interests are selling. So these accumulation phases are actually pivotal. They're really good areas to purchase into. And once we see that sign of strength happen and a break of this trading range, we should be seeing a green light in the form of a new trend being established. So thanks guys, thanks for watching. If you enjoyed my content, please like and subscribe. That would mean the world to me. But other than that, I will see you on the blockchain.